Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm joined by my uranium friend, Justin Huhn, the Uranium Insider. Justin, welcome back. It is great to have you again on my show.
It's a pleasure to be back. Thanks for having me.
Thanks. Justin, let's start with your Friday tweet where you stated, and I quote you, "Spot about to go, buckle up." I see that a lot of people didn't understand the context and the time frame of the tweet. So please explain, why do you think spot is going up and why should we buckle up?
Well, first of all, I kind of like to play with Twitter a little bit.
Of
So
course.
sometimes it's fun to just push buttons and shroud these sort of statements in a little bit of mystery. But no, we have a very in-depth network of contacts in the nuclear industry, specifically and importantly with people that are buying and selling physical uranium. So we have a pretty unique insight into the dynamics of the spot market and term market, and just communicating on Friday with one of these contacts, and we saw, according to this person's account, basically that very, very small amount of uranium that they were trying to purchase was moving the price up about $1.50 just out of nowhere. They dropped their bid by 50 cents and the offer went away. And then 30 minutes later, it showed back up $1.50 higher. So, and that's on 100,000 pounds. This is a very, very, very tight market.
Yeah.
And the stagnation in the price that we've seen over the past 2 or 3 weeks has happened because of very, very small amount of volume being traded in the spot market. It's not because supply has been flooding in to keep the price down or anything like that. It's basically just the buyers kind of stepped back and said, okay, we're at kind of this pivotal point, right around that $74-$75 mark. And historically speaking, that's been a point of resistance on a couple of occasions. Not that it still is necessarily, but right at that mark after a really strong run from the mid 50s to $73 that happened in less than 2 months, August and September this year. And so it's been resting there. It pulled back a couple of dollars, then went right back up to a new high, and now we're kind of chopping right around that range. So yeah, it just had to do with communications with folks that are actually buying and selling uranium and kind of understanding where this market is at. So, I don't know that the price is going to move right now. And, in this moment today, it looks like it is, but it's basically just, a statement of my belief that the price is going to be heading higher soon. And it's not going to take a lot of volume in purchasing in order to make that happen. So, and that has to happen at some point.
Yeah, agreed. Justin, if a new investor in uranium comes to you and asks you how is the current situation on the uranium market in terms of supply and demand, what would you say to them?
I would say that in the near term, so currently and for the next few years, there's kind of a dearth of supply and rising demand. So I would say that a snapshot would be the uranium price has already moved substantially off of the lows. You could argue that the lows were way lower than they needed to be. $18 a pound with, the average cost of production probably at the time in the 30s. Now it's definitely higher with all the inflationary inputs, but I would say that the supply is in deficit. We're about 40 to 45 million pounds of deficit this year alone.
Yeah.
That'll be lessened, hopefully a little bit less next year with McArthur River and Cigar improving in their production a bit. Kazatomprom will probably increase a little bit, although we haven't seen the increase in capex that is necessary to see that production come online faster. But we have this situation where primary producers are basically sold out of uranium for the next 3 to 4 years. We're in year 1 of a contracting cycle. There's a lot of utility demand on the table currently, and that will continue for the next few years during a period of time where the supply is very constrained. So yes, will eventually we see more supply from new large mines? We will. That will be NextGen's Arrow, Denison's Phoenix, Global Atomics, DASA, an increase in production in Uzbekistan and Kazakhstan, et cetera, et cetera. But we're talking about a 5-year time frame before most of what I just mentioned will be in production. At least 5 years, really, when we're talking about, especially like Arrow.
Yeah,
very large mine.
Like you said, we are at the seller's market right now. The way how I see it is that utilities they are more worried about securing the stable supply than the price they are paying. Would you agree on that?
Yeah, that's probably a better soundbite than what I just said. I have a hard time distilling these things down into sound bites, as
Okay.
might be obvious. But yes, no, it has shifted to a seller's market, and there's a number of things that are evidence of that. And one of those things has to do with term contracts. Long-term contracts is how the industry typically secures uranium, rather than going and buying all their needs in the spot market, which is less than 12 months settlement. The term markets say, okay, we're going to buy X amount of uranium to be delivered year over year for a 5, 6, 7, 8 year period, starting at X period of time. And that's typically how it's done in these contracts. When they were kind of a buyer's market, when there was a lot of uranium, there's a lot of above ground mobile inventory, the prices were much lower. It definitely was a buyer's market. You had the sellers giving some incentives to the buyers, such as providing flex provisions in these contracts, which basically allowed the buyer, the nuclear utility, to flex up or down the amount of uranium that they were receiving in these contracts. So you could say 500,000 pounds per year starting in 2023 for a 5-year period, but you could flex that up to 600,000 pounds, okay, per year. Yeah. And what happened since those contracts were signed to the present day is the price has gone up 4 times. And so what you're having utilities that did sign these legacy contracts utilize those flex provisions to essentially force the producer to give them more uranium than they initially contracted for. But now the contracts that are being signed, the new contracts, don't have those provisions because the sellers know they're not going to have that production flexibility at the time of delivery for these new contracts. And so that's a big and obvious sign that it's shifted from a buyer's market to a seller's market. And there's others, but that's pretty important concept to understand. And also why the near-term supply is so short, because all of these legacy contracts with existing producers, they're all being flexed up. So the existing producers are drawing down on inventories. The amount that they can sell for the next 3, 4, 5 years has been drastically inhibited by the flexing up of the utilities of previous signed contracts.
Yeah, when you say contracts, the word is on the street that contracting agreements with ceilings and floors have already triple-digit uranium ceiling in them, and so far the floor price we are seeing is high 60s or low 70s, in my opinion, and what I'm hearing in the contracts. Is that in line with your informations?
Yeah, I would say so, yes. And I would also say that the contracts that we're seeing now are almost entirely market referenced, rather than being a portion of those contracts at a fixed price. Because typically, let's say 3, 4, 5 years ago, contracts that were being signed then would at least have a portion that was fixed. And that fixed price was there essentially to guarantee to the producer that they would receive this amount of money at the time of delivery, without knowing where the market reference portion of the contract would be at the time of delivery. Now it's very clear where the price trajectory is going, and the sellers are basically wanting to grab as much of that upside potential as possible. So these contracts are basically entirely market reference. The floors being somewhere around the current price, the current long-term price, which is in the high 60s, and the ceiling's much, much higher. And the ceilings are there just to protect the buyer. So basically, a ceiling is sort of this implicit agreement between the buyer and the seller to say, we both expect the price to go significantly higher than this ceiling. So give us some protection here. And if that protection is in the 90s and the low 100s, it's basically just, you can see these contracts. The ceilings are telling you where the price is going.
Exactly. Agreed 100%. Justin, let's touch on RFPs. What are you hearing about RFPs quantity, and how do you think that will impact the market?
There's quite a few currently in the market. There's probably at least 10 right now, kind of in various stages of discussion. So RFPs specifically is a request for proposal that's put out into the public market. And so that's one way of securing uranium in the term or the spot market. And another way would be to actually have off-market discussions. So if you're a utility fuel buyer, you'll actually pick up the phone and call Cameco and say, hey, what have you got for 2028 to 2033? But the RFPs that are out there, there's a significant amount. We think that there's more coming. It's really interesting that most of the public RFPs and the actual term market contracts that have been signed year to date, the majority of them have been outside of the United States.
Yeah.
And a lot of them in the EU. And part of that is because the EU has had, as a percentage of their total uranium needs, reliance on Russia.
Yeah.
So obviously the shakeup that's happened with the invasion of Ukraine and the voluntary self-sanctioning of not securing new deals with Russia in terms of the nuclear utilities in the EU has meant that they've been more aggressive in the term market for uranium, for UF6 and EUP, or conversion and enrichment. So we expect that the US utilities have a little bit of catch up to do. The larger utilities are decently well covered in the US, but there's still, most of the utilities in the US still have a pretty good amount of buying to do. The utilities, generally speaking, have a decent amount of inventory just by nature of the fact that the fuel cycle takes 2+ years. Yeah. So there's always a little bit of wiggle room. The investing side always wants to think that they'll just let the cupboards run completely dry. That's not how it works. They don't let themselves get into an absolute panic moment. So there's always a little bit of flex in the system with these inventories, but generally speaking, we expect to see more RFPs coming from US utilities in the next months. And the demand on the utility side should stay pretty strong for the next few years.
Yeah. Justin, what is your take on the recent deal where Kazakhstan announced supply uranium to China? I mean, do you see China doing a better job in locking up the supply compared to the West?
Oh, that's 100% sure. Yeah. They also have by far the largest build out program. So I think they have 25, 26 reactors under construction right now.
Right now.
That's a lot. They're shooting for 150 gigawatts of nuclear by 2035. They have about 55, 56 gigawatts currently in operation. So almost a tripling of their fleet in the next 12 years. It's a massive build out program. They're probably not going to hit that goal, but they'll probably get close. I think they'll definitely breach 100 gigawatts, probably by 2030. And so they've been more aggressive in securing uranium. They have the largest inventories on the planet. They have somewhere probably between 400 and 500 million pounds of uranium. And most of that is in U3O8, but they are building out their own conversion and enrichment. And that's going to basically service their own needs. It's not necessarily to service the world market. Mm-hmm. And they have been very aggressive about securing pounds. So, more than half of the uranium that Kazatomprom produced in the past years has gone to China. Just selling pounds that they're producing on an attributable basis are being sold to China. Then China has a few joint ventures with Kazatomprom. But just in the past 12 months, we've seen two huge contracts with two separate Chinese entities, utilities, basically, who are signing very, very large contracts with Kazatomprom. And how large these contracts are is also kind of under NDAs. We don't exactly know the terms of these contracts, but we do know that both contracts went to a shareholder vote, a special shareholder vote with Kazatomprom shareholders, because the total value of the contracts between Kazatomprom and each of these individual Chinese entities, including these proposed contracts, would be more than 50% of the book value of Kazatomprom. So basically, we can make a relatively educated guess that these contracts are north of 10 million pounds of uranium for each of these two Chinese entities. These are very, very large contracts. And from what we can tell, all of the evidence is showing more and more uranium coming from this country. And generally speaking, from this region is going to be heading east, China and Russia, but specifically China.
Yeah, I would like to hear also your comment on Cameco and Kazatomprom. Like you said, who is drawing better moves here between those two? I mean, overall, selling uranium, producing plants, offtakes, management. Can you pick a side, so to say?
Oh, well, I mean, I think Cameco is operating in a kind of a different manner. They're looking at vertical integration. So, the 49% stake in Westinghouse gives them fuel fabrication, potentially more conversion. They own a stake in Global Laser Enrichment. So at some point they'll have enrichment as well, and they'll be able to go mine uranium, conversion at Port Hope, and possibly also in the UK through Westinghouse. Eventually they'll have some enrichment, and then they have fuel fabrication with Westinghouse. So they're looking at this whole picture of the overall trend of nuclear becoming more palatable and increasing capacity globally, and trying to position themselves to be a major player throughout the fuel cycle. That's a different aspect than what Kazatomprom is doing. They are the lowest cost producer. So they're producing an enormous amount of cash, paying a big dividend, doing what they can to increase production, but it's also still 75% owned by the sovereign wealth fund of the state of Kazakhstan. So it's only 25% public. The C-suite is a revolving door. We've seen, what 5 or 6 upper management changes in the last few months. It's an absolute revolving door. I think that the
not just upper, even middle management changes were also present.
Right. Yeah. And, and they also pushed through this deal with Russia in December of last year, which was the Rosatom took a 49% stake in the Budenovskoye 6 and 7 blocks. And this is a very, very large deposit. Obviously the Western world was not happy about that. And a lot of people, even within the company, this is hearsay, but presumably left the company because they disagreed with that move. So the influence over Kazakhstan and Kazatomprom by Russia is absolutely there and never has not been there, and it's likely to increase. So and I don't really have anything terrible to say about the company, but it's just a very different operation from Cameco. Cameco is operating in the West. They're pounding the ESG drum. They're looking at this overall big picture, vertically integrated nuclear fuel cycle company. So just two different use cases entirely.
Yeah. Justin, let's touch a little bit on the uranium equities. Where are we in the terms of institutional money? Do you see big money coming in the sector soon? And do you believe that only big names, producers and near-term producers will benefit from that money, or the tide will lift all boats?
I think the tide will lift all boats. But I do think that it takes time for liquidity to improve for those mid caps and the small caps and have that institutional money trickle down into those individual names. But I think that looking at the way that the large caps have performed relative to the small and mid caps during this most recent leg, let's say, tells me that it's primarily been institutionally driven. The institutional money has 5 levers they can pull. They can buy Cameco, they can buy NextGen, they can buy UEC, they can buy the Sprott Physical Uranium Trust, they buy the ETFs. Now, when they buy the ETFs, which the ETFs, by the way, are majority owned by retail, but there's still a lot of options activity, especially with URA, that, and especially if that's heavy on the call side, and then the market makers have to hedge off that bet by selling those calls by buying long stock. Mm-hmm. So when you see URA with significant volumes and big up moves, a lot of that has been driven by the options market. So the institutions only have so many levers they can pull, but with the ETFs buying, they buy everything that they hold. So in the month of October alone, we saw more than 200 million in inflows into the ETFs. And the stocks kind of went sideways. There was a lot of individual stocks selling, and this probably, in my opinion, has a lot to do with just the backdrop, the overall equities macro backdrop, which has investors kind of tepid on just being long anything here. But we do see evidence of money rotating. That has to do with just looking at the ETF flows, looking at the shares outstanding for the ETFs. You can tell that money is moving into the sector. And then also just communicating with money managers in the space that are speaking with medium and larger size hedge funds that understand the story and are starting to put some money to work there. But it's one of those things that it's kind of like a snowball effect. You have to see the sector get larger, and then size will beget size will beget size. And that can take time. So I do see evidence of money rotating. I do think it's a difficult point here because everybody is bearish equities right now. Everybody and their daughter is wanting to short the market, but uranium is going higher. So what do you do with that information? That's up to you as an individual investor. For us, we can't not be long uranium here based on what we know. Yes. So when what we know is the price is going higher, and probably substantially so, and possibly in a very rapid manner. But it also looks pretty scary as an overall macro backdrop for various reasons. And I'm not a macro expert, but I am a uranium expert, and it's impossible for us to not be long here. And so far, that's working out.
Yeah, that said, you expect the decoupling in the, let's say, 2024 for uranium stocks.
Yeah, I mean, it's already happening. If you chart URNM or URA against the S&P, the outperformance is pretty marked. We're getting, actually on a relative basis, we're getting near levels that we saw at the peak of the uranium equities, which was, about 2 years ago. So that decoupling is already happening. I expect it to happen further if we do continue to see money rotate, out of overvalued tech and into, commodities and energy plays. And I think that the energy sector as well, most other commodities do not do well in a deflationary environment. And so if we have a recession, we're going to see oil probably fall at least a little bit, even though the supply side is there's problems on the supply side for oil, but that's a whole different story. But most commodities don't do well in that environment. Uranium is totally different because of the timeframes in which utilities buy. They buy when they need to buy. They're not trying to time the market. They're not trying to buy low, sell high. They're buying to fuel a reactor. You can't not fuel a reactor. So if the price is 35, if the price is 135, you're gonna buy it anyways. And that makes it very, very unique amongst commodities. And it doesn't matter how much of a recession we see, how long it lasts. Assuming the plants are going to stay online, which they will, utilities will be buying uranium, and that's what supports the price. So yeah, it's a very unique setup.
Agreed. Justin, we saw a big merger recently between ISO and Consolidated Uranium. Do you believe we are entering the period where we could see more M&A? And if yes, where do you see the biggest moves? Is it the Athabasca, US, Africa, Australia? What's your take on this?
Yeah, I think so. There's so few actual viable development projects that I don't know that we'll see a ton of M&A. There's a lot of companies now. There's like 135 companies that have something to do with uranium right now, and that's up from 50 or 60 just 2 years ago. Yeah. So we've seen a little bit of an arms race come into this sector. I think we're definitely going to see continued M&A, but how much of it is hard to say because, like I said, that yes, there's 4 or 5 dozen companies that have a little bit of moose pasture in an area that's probably never going to get mined. I don't know if anybody goes after those companies unless we get into this really kind of stupid frenzy where just anything with uranium in the name gets bought by both investors and other companies. We could see that, but that's not really on my bingo card, at least not for the next 12 to 24 months. If we get into like really crazy kind of investing fervor in the sector, we could see substantially more M&A. But yeah, I do expect we're going to see some more M&A. It's hard to say exactly how much though.
Yeah, but do you think that we have entered the phase of media attention for uranium, or we are not there yet?
It's getting there for uranium. I think we're seeing improved media coverage of nuclear, which of course is excellent for the uranium trade as well. The story of nuclear being embraced has been a phenomenal shift since I've been following this market. I started looking at this in 2016 and it was still very hated. Nobody cared about nuclear. It's really, truly remarkable how significantly this has shifted, where I can actually have conversations at dinner parties with complete strangers and start talking about nuclear energy and find that they actually are in favor of it. This is something that hasn't happened in my lifetime, and especially since I've been following this. And so it's very, very good to see. As far as uranium equities, we're starting to see, John Chipaglia, the CEO of Sprott, appear on Market Watch more frequently. We're seeing Cameco and URA mentioned on some of the mainstream, investing in business outlets. The story is getting out there. It's getting out there. But certainly we're nowhere near kind of an overvalued type of situation. And that, I think, comes in the later innings of the trade. And I don't think we're there yet. I think we're actually quite a ways away from that still.
Yeah. I know that you don't have a crystal ball, and you got asked this question probably a few times in one day, but where do you see uranium market and the prices in 1 year from now?
I personally think we're on the cusp of a pretty big move in terms of the price of uranium. So I really don't like to make price targets, but a year from now, I think there's a pretty good chance we're north of $100, and we're right now, I think, $74 uranium. So I think that's possible. 30 to 40% higher from here would be certainly on the table between now and a year from now.
Okay. Change of subject, so to say. What is your take on the timeline of Western conversion capacity increases, restarts and upstarts, and how this could affect U3O8 prices?
That's a good question. The converters So I recently attended the NEI conference in Charlotte. This was about 3 weeks ago.
Yeah.
And there was a panel that consisted of a couple of reps from both Orano and ConverDyn. And those are the major converters in the West. And so the gentleman from ConverDyn basically said straight up, shutting down ConverDyn for 6 years was very, very, very painful. Those were his words verbatim. These guys do not want to put their neck out and just take the investment risk of expanding operations only to kill their own business.
Mm-hmm.
So they are only going to expand capacity when they have sufficient long-term contracts with nuclear utilities at prices that justify that expansion. There still is some capacity left for both Orano and Cameco, not much, but a little bit. ConverDyn is the easiest to expand. They can almost double their current capacity with reasonable capex, but the kind of the fly in the ointment with them is that it's owned by Honeywell, and this conversion business is a drop in the bucket for Honeywell. They don't have a lot of incentive to double capacity at ConverDyn, so they need higher prices and long-term contracts, and in that, if that happens, they will expand. But I don't think conversion is tight, but it's not really limiting the industry here that much. So we're not holding our breath for Western conversion to expand. If it did expand faster, we would see overfeeding at the enrichers, which would equal a lot more uranium demand. But we don't need that, because what we're talking about is enrichment contracts that are being signed now in the West have very high tails assays. And so typically what happens is a nuclear utility will secure enrichment, then secure conversion, and then they'll go out and buy the U3O8. And the amount of U3O8 they have to buy is dictated by the tails assay in that enrichment contract. So if we're seeing tails assay contracts for the late 2020s, early 2030s, north of 0.3 tails assay, that's about a 20 to 25% increase in the amount of uranium they have to buy. But of course, they have to secure the conversion as well. And they do those two things first before they buy that uranium, because it doesn't do any good to sit on a bunch of uranium and not have conversion. And the enrichers are also pretty big consumers of conversion. So some of the biggest customers for the converters are the enrichers.
Yeah.
Which is really interesting. So yeah, the overfeeding aspect of it is not something that has to happen in order to see a larger amount of uranium be purchased. It's these higher tails assay enrichment contracts. So conversion right now is tight, but it's not a major industry killing bottleneck. So yeah, hard to put a time frame on it, Lucian. I think honestly, more conversion capacity. We could see Springfields start up again in the UK. And the UK has actually put up, I think they put up a 15 million pound loan or grant, I think, to Westinghouse to look into seeing if it could be restarted. So if Springfields restarts and if ConverDyn increases capacity, let's say at minimum 3 years and probably closer to 5.
Okay, I think so. Justin, at what format do you see physical funds in the future?
In what format?
Yeah.
Well, I think that there's actually more uranium being purchased by hedge funds than most people understand. And it's not a lot on a relative basis, but I think that everybody thinks that the only financial influence on the physical market is coming from Sprott and coming from Yellowcake and coming from Zuri Invest. And that's not necessarily the case. There are hedge funds that are buying physical individually, but it's not a huge amount. Nothing compared to the previous market, at least as of yet. So I tend to believe that these types of physical funds are not set up for no reason. I think that people that set them up have a very strong sense of investor interest and are doing so because they believe they will make money in setting these funds up. So and Sprott's already killed it, right? So they're going to do extremely well, and their AUM rises every time the uranium ticks up, and they make money on management fees on the AUM, right? Yeah, so they don't need to buy another pound. That's going to be a very successful venture for them. The new funds that we're hearing about, one is called PFYN. It's based out of Singapore. There's rumors about hundreds of millions of interest in this fund. Those rumors are probably true. So the physical buying is not necessary for this thesis. It's just kind of the nitrous. It's sort of that extra sort of X factor. I do think we will again see a period of time where investor funds will flow into these physical vehicles and they will buy uranium, and the market is so tight that it's probably going to make the price move very quickly. But I don't have a crystal ball, and I don't need that to happen for this thesis to work out, which is what makes it such a great investment thesis, because you have this thing that's there and it's probably going to end up squeezing, but we don't need it to.
Yeah, good point. Final question, Justin. Your thoughts about Niger situation? We are seeing, sorry, we are seeing transition government is in place and includes a new prime minister and the cabinet. Are we seeing this situation going in a better direction for the companies operating there? I mean, especially Global Atomic, OVX, Myriad. Is this, let's say, a beacon of hope for better situation in Niger?
It's hard to say. It's hard to say. The country is extremely poor, yes, and really needs the uranium revenues. There's an obligatory 10% ownership of every mining operation in the country by the state of Niger. In the case of Global Atomic, they negotiated an additional 10%, so it's 20% owned by Niger. But there has been very strong anti-French sentiment since this coup. And Orano, the French military, is pulling out of the country. Orano, which has been operating in the country for multiple decades, is actually shutting down Somer, their uranium mine. They're shutting it down this month because they're having problems importing reagents. Now, they haven't seen any problems at the mine. The operations haven't been interrupted, but they can't get reagents across the border for the processing of the material, so they got to shut the mine down. Which is probably one reason why Orano and EDF and the French in general have been looking into shoring up relationships in Kazakhstan and Uzbekistan. And Orano has been setting up an ISR project in Mongolia for a number of years, still many years away from commercial production, but they're trying to diversify the supply. I don't really know where this goes for Niger. It seems to me, anecdotally, like it's settling down a bit and moving in the right direction. And as far as the non-French based companies in the country, as far as we can tell, their operations have not been impacted, besides the border problems that are affecting Orano as well. And the country is still absolutely in favor of these projects being developed. So as of now, it looks like it's improving. It's certainly not quite where it needs to be in terms of implementing a new democratic election in the country and resuming kind of the ties, especially with the United States, and aid that typically comes to the country. So, and I think the U.S. is going to be supportive. I think that the U.S. wants to maintain a presence in the Southern Saharan region. So they are most likely going to support whatever happens there in terms of the country shoring up its political situation.
Yeah, agreed. Justin, thank you very much for being my guest. That was Uranium Insider Justin Huhn. Thank you for coming to my show. It was a great chat as always, and I hope we will chat again sometime soon. Thanks.